So I've had some buyers ask me the question of what happens if their loan doesn't appraise. It can be full of a lot of questions, a lot of apprehension behind it, and some sellers also get nervous when they hear that their buyer may have issues with their loan appraisal. So it's a question some people ask me. It says, will the loan appraise? It's not a question I can answer because I'm not an appraiser. It has to go through the process. So I wanted to talk with Rick Waldron of Guaranteed Rate to just talk to us a little bit about what happens if, somebody's appraisal doesn't come through as expected.
Yeah, so it's a very important question. There's an assumption if, as a client, you're putting 20% down, that a low appraisal doesn't matter. But that's not exactly true. The bank is lending off of the lesser of the contract price or the appraised value. So, for example, if you're buying a home for $500,000 and you're putting 20% down, so you'd be applying for a $400,000 loan. So if it doesn't appraise at the contract price of $500,000, let's say, for example, it appraises at $450,000. Okay, the lender, if the client still wants 80% financing as originally applied for, the bank, the lender, would have to lower the loan amount to $360,000, 80% of $450,000, not 80% of $500,000. This in turn means that the buyer now would have to increase their down payment accordingly. So instead of a $100,000 down payment, they'd be making a down payment of $140,000.
Okay. And at any point, would there be a risk of, say, the mortgage not getting approved then due to appraisal issues?
Well, yes. If the client doesn't want to move ahead as originally, right, because they originally applied for 80% financing based on a $500,000 contract price. They, of course, have the option to go back to the seller and try to renegotiate. If that is not an option, they would have to either come up with an additional down payment, or the lender could provide financing above 80%, but it would be an additional cost to the client because they would need to pay a mortgage insurance payment on top of that, and they would it's private mortgage insurance, and they would have to also qualify for that additional payment. So their qualifying payment would also be increased. So it could impact the underwriting, and as I mentioned, the client would have to agree to move ahead with a more expensive loan.
Okay, so definitely it's not a guarantee if someone is doing 20% down payment. It really just depends on the factors kind of that you mentioned.
That's right.
And all of that. Because I have seen some pre-approval letters where the bank puts in subject to satisfactory appraisal. And that some people get nervous when they see it, but it's kind of a protection for people out there to say that, look, you have been pre-approved, but there's still another hoop to step through.
That's right.
To make sure the pre-approval
that's right, because
comes
the collateral for the loan is the property itself. So although the client is fully credit approved, the collateral may not be approved yet. So there is, going into a transaction, there is that risk that the home may not appraise.
All right, so really what I've seen then in the transaction side is that if that issue pops up, the bank will let the buyer know. And at that point, it's like you said, it's like sometimes either the buyer just puts up the extra money, or if it's a market where things are a little tighter for sellers, they may be, a little bit more willing to negotiate. But, just make sure that you know all the money that you have in case they need to add in some additional money for that down payment. All right, then. Thank you, Rick. This is very helpful. Please like this video and share with your family and friends. Put any comments down below in the comment section and we'll get back to you. Thank you.